So yeah, as we're wrapping up Disrupted Island, I'll make a quick introduction to Carter Capital. Carter Capital is a crypto asset management company founded by myself. I have a background in investment banking, so I have been trading traditional assets for several years, and now I'm bringing these skills to crypto asset management. It's founded by myself. There's a chairman of the company, which several of you know, and we really focus on low-risk crypto investments. We aim to achieve a return of 100% per year for our investors. This is very, very low by crypto standards. There are many instances and examples of people making many, many more multiples than this. We're not interested in that. Only very safe and secure crypto investments. We have 4 investment strategies. The marquee strategy is one called Bespoke Discretionary Portfolio. That is whereby an investor would create a wallet protected by their own keys, their own passwords. Carter never has access to that wallet, if only FTX ran the same model. We connect to the wallet via an API and implement our strategies therein. Investors can therefore be assured that Carter Capital cannot and will not remove any funds from their wallet or use it for any non-trading activities. We have 3 other strategies. We have a DeFi strategy, an algorithmic investment strategy, and crypto mining. But for reasons I'm going to come on to, we are most bullish on the discretionary strategy for the next 12 months ahead. This is a current overview of the crypto market. As we can see, every asset in the top 10, aside from the stable coins, are down year to date from 70 to 85%. It's not been a good year for crypto. Apologies for the formatting here. What are the current sentiments within financial crypto market? So leaving aside VC and projects which are developing at an astronomical rate, let's talk about the listed securities. What are the sentiments right now? There is a feeling of extreme fear right now. Investors are scarred mentally, physically, financially by the last year and even the last 30 days. We have witnessed an unwinding of leverage. There are several key institutions within the crypto sphere, or previously key, that have been operating at severely over-leveraged levels and are now experiencing an unwinding of that leverage. Some of the key institutions were mentioned here, FTX and Alameda, and we are now seeing an unwinding of DCG. DCG is Digital Currency Group. Within Digital Currency Group, there exists the following companies down here. There is Genesis, which is our industry's leading lender and prime brokerage firm. A prime brokerage is an institution that conducts lending, borrowing, custody, and OTC transactions. It's an all-in-one, one-stop shop for crypto. There is also Grayscale, which is the originator of the Bitcoin Trust. I'm not going to go into too much detail here, but just be mindful of this. This is the next story to develop in crypto. However, Carter Capital has outperformed the market in 2022, whilst the benchmark asset is down 65% so far this year. We have been up just over 24%. That is thanks to our crypto mining strategy. And for the next 12 months, or the calendar year 2023, we are very, very bullish. We are very, very confident on how the markets look. Right now is a very scary time. It is a very extreme time in crypto markets. However, we are, I believe, nearing the end of this traumatic period. The fact that we are now seeing the preeminent entity in the business, DCG, experiencing these problems, tells me that we are almost at the end of this traumatic period. Once this has passed, we are going to be entering a period of time where macroeconomic and monetary forces will be supportive once again. Before all of this trauma in the last 30 days, the key theme of 2022 so far was interest rates going up in response to inflation, which we've all felt at the grocery store, the gas station, etc. The inflation was caused by excessive money printing in the aftermath of COVID. Now that inflation is being brought under control in developed markets, we will enter a period of time where money will be printed again by central banks, which will support crypto markets, VC markets, and even public equity markets. Carter Capital is very, very well placed to benefit from this in 2023. Our investors have not been exposed to the market at all in 2022 on the discretionary side, and in fact have received some positive returns thanks to our crypto mining strategy. We are now actively moving our clients away from mining and into the discretionary, ready for 2023. I'm just going to finish and fly through with some slightly technical analysis, just to give an insight into the sort of things that I look at as a money manager, just as we wrap up. What we can see here is something called the rainbow chart, using a mathematical premise called logarithmic regression. This is Bitcoin price on a log scale. Logarithmic regression tries to eliminate the short-term fluctuations and show a long-term trend. We are at the very bottom logarithmic channel at the moment, which these guys call fire sale. I've pointed out where we are today, and I've pointed out in history other points in time where we were in this channel. And we can all see what happened in the years that followed being in this channel. We saw severe uptrends, which I do believe is going to come in the next 12 to 24 months. Again, Carter Capital is very well positioned to benefit from this, not just in BTC, but other blue chip assets. Another piece of analysis that I look at is a 200-week moving average. Again, the same sort of premise. We have dipped below the 200-week moving average. There were 3 other periods of time where this happened, and we can all see what happened when that occurred. Of course, that is not a guarantee that such things are going to happen again, but this is all building a bullish case for crypto markets. And finally, we have something called the Fear and Greed Index. This is more of a subjective index, whereby things like sentiment on social media, the number of transactions that occur, the amount of funding that is raised for blockchain and crypto-based VCs is amalgamated and put through a calculation to give a 0 to 100 reading. Again, as we can see, we're in the darker dots here, which is feelings of extreme fear. Again, when there were historical periods of extreme fear, there were after that periods of price appreciation. Fortunes are made in bear markets. When there is fear in the markets, those that acquire assets tend to do very well thereafter. Again, Carter Capital is keeping this very much to mind, and we're looking forward to benefiting in the next 12 to 24 months. To reiterate, we invest on a very low risk basis. We do not chase trends. We do not chase cat coins and shit coins and dog coins. We maintain our investments in blue chip, high quality assets, and we never, ever hold any of your capital. We never hold any of your assets. Therefore, we cannot do any funny business with that, as we've seen happen we've seen come to light in the last 30 days. Melanie, you actually gave a very politically correct explanation about what happened in the last 30 days. I just want to comment on that. It's very interesting to see that this gentleman that caused a lot of this pain has not been brought forward to any of the judicial authorities. There are some reasons for that I'm not going to go into. But as we are at this point, I do see really people, as you've mentioned, feeling physical pain, physical distress, emotional trauma. When we reach that phase of the cycle, we can see here a cycle up and down, up and down. When we reach this phase of the cycle, as we did in the last crypto winter, 2018, as we did after the run-up in 2017, I have experienced myself what happens thereafter. And I'm sure that the same thing is going to happen again. So stay with it, guys. I think we're nearing the end of this difficult period. And companies like Carter Capital, we are well placed to benefit from the next 12 to 24 months.